Hello, good afternoon and good morning to you, depending where you are. My name is Ariana Batori and I work for the International Finance Corporation. It's a member institution of the World Bank Group. Today I have the pleasure of speaking to you about telecom energy services companies. The structure of today's session is as follows. I will begin with a presentation going through a few slides on IFC's efforts in this space. And this will be followed by a panel discussion with fellow investors. We have a really good lineup today, where we will exchange views on investability of ESCOs and the trends that we see in the sector from an investor's perspective. Without further ado, I will go into the presentation. A very brief overview of who we are at IFC. As I mentioned, we are a member of the World Bank Group. We are the part of the group that focuses exclusively on the financing of private sector companies. Our sister organization actually works with governments on the regulatory side. What we do at IFC is we provide investment in any shape or form. It can be debt, equity, mezzanine, and anything in between, as well as advisory services. And we also do a lot of mobilization, working with other investors, trying to attract capital to emerging markets. We are a AAA rated institution, which allows us many times to have access to good funding capital, and we have a global presence in over 100 countries. In the MEA region alone, we have more than 30 offices, and wherever we are not present, we do have regional coverage in any way from neighboring countries and from our headquarters in Washington, D.C. Just to give a magnitude of the size, on a yearly basis, IFC invests somewhere around $22 billion of capital across emerging markets and across sectors. I think I haven't mentioned yet, but this would be a good time to tell you that I am part of the global telecommunication, media, and technology team. And within this team, you see on the screen here the key verticals that we focus on as far as investments. Of course, our most established vertical, the one we started funding in the 90s, as soon as telecom markets became deregulated, was mobile network operators. You see at the top there an indication of how much capital we've invested in total. It's about $7 billion. And this has been, again, across geographies, and MNOs have been a key partner, of course, for pushing connectivity in emerging markets. Then, as MNOs started divesting towers, IFC also followed that trend. So we heavily supported most of the tower companies, especially in Africa. You would be familiar with most of the names that have been or are continue to be our clients. We've invested a total of about $1 billion in the tower segment. Then come broadband companies. Broadband for us is any company that provides connectivity services. We are agnostic as to whether that is through submarine, satellite, or terrestrial. And finally, data centers. In data centers, the volume is lower because most of our investments have been on the equity side, so it's hard to match the volume of debt financing. On the right side of this chart, of this slide, you see ESCOs featured. And for the ESCO segment, we have about 200 million outstanding. As of today, it's largely companies in Asia, and you'll see on the next slide exactly what I'm talking about. But if we focus on Africa for now, at the bottom of this slide, you do see that Africa represents about 24% of our committed portfolio. So because we are a global institution, of course, we invest across regions. And in terms of sectors, MNOs continue to represent about half, followed by towers and then broadband and other sectors. In the ESCO space, we did our first deal 10 years ago in 2010. This is an equity investment to Applied Solar in India. You may know that India is one of the more developed markets and one where there have been a lot of learnings in this space. Our second investment was done 3 years ago in Myanmar, and this is a company called Yoma Micropower. It is also one where we have been involved from the early days, and then as the company grew, we've been able to support them with debt financing as well. I think in addition to these two companies, it's important to again mention the significant experience in funding MNOs. I listed here, there's been over 100 of them since 1991. There's been about 17 tower companies, and also our energy colleagues do a lot of investment in the off-grid, mini-grid space. So collectively within IFC, there is a lot of lessons to be pulled into the ESCO segment. A very exciting topic that I would like to spend a few minutes on today is an ongoing study we are doing on the global telecom ESCO market. And of course, Tower Exchange has been a pioneer in covering this space for a few years. The GSMA recently launched a report on clean tech. We also, together with the GSMA, launched the first Green Power for Mobile report in 2014. So there's been some good joint efforts in this space. We wanted to put something out there that focuses on the investability of TESCOs. And that's why you see here 4 key points listed as the scope of work for this study. And I don't need to read them out, but what we're seeking to do first is to get an estimate for the global size of the potential market, meaning how many sites do we have in off-grid and bad grid areas globally in emerging markets. Second, we want to look at what are those factors that make a country attractive for an ESCO. Is it the legal framework, the regulatory, is it a technical issue, is it the structure of the market? Third, we want to look at the dynamics and stakeholder relationships between the MNOs and the towercos and the TESCO, how people work together, how do they compete? And lastly, we want to really analyze the risks, the opportunities, and the bankability of TESCOs. We hired our colleagues here from Roland Berger to help us out with this assignment. And we have been actually doing a sizable stakeholder exercise. So probably we've been speaking to a lot of you who are listening right now. We've done over 60 interviews with MNOs, towercos, ESCOs, vendors, and also with regulatory agencies and with investors. If we have not spoken to you yet, I would love to do that. So please reach out to me after. The intention here was to do a really 360 view of the segment and understand where people see it. Is it growing or not? What are the trends? And understand really all points of view. We are almost done with this, and we're a few weeks basically of completing it. And we'll be happy to share with everybody. It will be a public report, so we'll make sure to make some noise around it so that you know it's coming. What's new about it? I think the estimates of global off-grid and bad grid towers are covered also by Tower Exchange and the GSMA. We may have some differences in definitions. Other than that, I think the novelty of it comes from a deep assessment of the TESCO business model, which actually ends in a proposed market segmentation. We've come to the conclusion that there are several types of ESCOs out there. We've also blended in all sorts of technology and regulatory trends into our assessment. We've done a deep contractual benchmarking exercise by reviewing a total of about 11 so far actual contracts, looking at the clauses, and we're hoping to extract from there some lessons learned that we could potentially share. In terms of geographical scope, you see here everything is colored in some color other than developed markets where IFC cannot work. So no North America, no Western Europe, no Japan, Australia. Other than that, pretty much everywhere all the geographies have been covered. In terms of definitions, we call a site, I think most people do, macro and rooftop sites. We did not focus on small cells for this exercise. For bad grid sites, we call bad grid something that has more than 8 hours of outages per day. I know there's other definitions. Some people use 6, some people use less or more. In terms of a snapshot of where we are today. So today, Tesco's control the power assets at about 1% of the total global sites. However, this number is actually almost half of the total renewable energy sites. You see this on the bar on the left. So 47% of the renewable energy powered sites today are controlled or managed by ESCOs. And the other idea that I would like to leave you with from this slide is that the size of the pie is expected to increase. So by 2030, we forecast that these renewable energy sites are going to represent about 30% of the sites, which is a 3 times increase compared to 2019. In terms of our forecast by region, you see here 2 that are kind of in a blue box, and this is Sub-Saharan Africa and South Asia. And we feature these because these are the regions where the proportion of bad and off-grid sites, even by 2030, is expected to be larger than 30%. Now, between the 2 regions, you can see different dynamics at work. And what I mean by that is if you look at the red bar, which are the off-grid sites, in Africa, we expect an increase, and in South Asia, we expect a decrease. And this is, of course, driven by essentially an expansion of the grid and whether that grid expansion can or cannot keep up with the growth of the telecom networks. When we did this forecast, we tried to take into account not only the factors that contribute to a growth in the number of sites, but also those that may trigger a decline. And on the right here, we do have a number of those, including tower sharing, including grid availability. In terms of Tesco sites, so on the previous slide, we looked at the off-grid sites in total. That doesn't mean they're all Tesco sites. So out of that pie, if in 2019 we had a Tesco penetration of 7%, we're expecting that by 2030, that penetration is going to be 22%. And in terms of regions where the growth is coming from, it's consistent with the previous slide. It's basically Sub-Saharan Africa and South Asia. We did have to make a number of assumptions, and you will be able to read about them in detail in the report, but we basically had a cutoff point for every country, assuming a minimum number of Tesco sites. We looked at the solarization potential. We looked at how Tesco's compete with towercos that also offer power as a service. So everything has been blended into these forecasts. In terms of clients, so today actually towercos with PAS represent a large percentage of Tesco clients, but going forward, we expect that most of the demand will come from MNOs themselves. And you see here a couple of reasons why. One of them being MNOs who want to retain control of their towers and respectively power assets. And the second category being MNOs that have already outsourced towers, but they're seeking a little bit of flexibility. And then we do make the distinctions on towercos that do not offer power as a service and those who do. Obviously, the latter are more inclined to build their in-house capabilities and potentially go after this market. However, we do see a small demand from this category as well, as you see on the very bottom of this slide. Very important point for our panel discussion today, but how does this translate into numbers? We estimate that about $4 billion of investment are needed in order to get us to where we need to be by about 2030. And you see the breakdown here of these new sites in terms of brownfield and greenfield sites, and also a breakdown of this investment amount by region, which largely coincides with the overall story that Sub-Saharan Africa and South Asia are the two regions with the highest potential. Of course, this is also an area where we've had to make a number of assumptions, and in terms of capex, cost, etc. You'll be able to also read about those in detail in the report. This is the last slide I would like to leave you with, and it's meant to be more of a teaser than anything else. I think by looking at all of the operators in the market today, we've essentially come to the conclusion that there are four key categories, so to speak. The first one are those Tesco's integrated with O&M service providers, and you see here a few company logos. These are companies that had already been managing various telecom sites. On the right, or let me go in order, in category B, we have those Tesco's integrated with power equipment manufacturing. And similarly, you have here a few company logos. In C, we have the Tesco's who are also power producers. And we'll get a chance to discuss those as well today. And in D, there is one kind of pure Tesco player that we've been able to identify who focuses exclusively on the provision of power. So in the report, we go into details of all of these types, looking at advantages, potential risks, and do a really thorough review of them. But I would like to stop here for today because we do have our panelists on the line and everybody's keen to share with you their insights. I've listed my email address here in case anybody would like to reach out, contribute to the study, or otherwise discuss financing. I will stop sharing my screen so that the panelists can turn on their cameras, and I would like to introduce you to them. Welcome, everybody. I will go in order here, so no particular order. We have Bertram Dreyer. He is a senior manager for infrastructure at DEG. We have Rim Azirar. She is a senior investment officer at SunFunder. We have Paul Helgesen. He is an investment director at Northland. We have Benoit Denis, if you could turn on your camera, please. He is a senior economist for digital infrastructure at EIB. And we have Henry Gouze, who is a project manager with Green Giraffe. Without further ado, I will let everybody introduce themselves. And while they do that, I would also like to ask them to tell us a little bit about their institutional experience and interest in the ESCO space. Bertram, over to you.
Okay, thank you, Ariana. Thank you for the good presentation also, which I enjoyed. Yeah, Bertram Dreyer, I'm working with the German Investment and Development Company, which is basically the small IFC, I would say, the small German IFC. We are also long-term lenders providing equity and debt instruments in emerging markets. I'm heading the telecom desk at DEG. We have been looking since, I would say, 3 years into ESCO opportunities and found this sector exciting and interesting. And in 2019, we successfully syndicated a facility for one of the ESCO players, which we also saw here on the slides, which is IPT PowerTech.
Thank you. Rim?
Thanks, Ayana. Yes, my name is Rim. I'm again a senior investment officer at SunFunder. And for those of you who are not familiar with SunFunder, we are essentially an asset manager that specializes in providing debt solutions to solar enterprises. We're focused on emerging and frontier markets with a strong focus on Sub-Saharan Africa, our main office being in Nairobi. Today, to give you an idea of scale, we've put around $150 million of loan at work across around 50 companies for the past 8 years that we've been around. We've been able to finance the entire sort of solar value chain, from solar home system to CNI players, small IPPs, mini grids, and so on. And telecom escrows has emerged for us as quite a key and growing segment for the past 3 years. We've done our first loan in the sector actually in late 2017, and have since funded 3 more ESCO projects, 2 of which have been done this year. So that also speaks to sort of SunFunder's appetite, even during an abnormal year. Our investors have been super supportive and pushing us to do more in the countries where we are active in.
Excellent. Thank you, Rim. Tal?
Yes, I'm Paul Hegesen from Northland. So Northland is the Norwegian DFI, one of the younger in Europe. Fairly fast growing in terms of capital base. We have around, I think, just south of $4 billion now committed to projects in developing markets. And we have a very strong energy portfolio. Around 50% of our portfolio is energy related asset. Most still is sort of large scale grid connected across the technologies. But we have, for the last, I'd say, 4 or 5 years, quite systematically followed the distributed sector. And we find the telecom sector is, I mean, it's a business model based on footprints where there's little infrastructure basically, and a lot of poor people without electricity and with need of communication. So it has some characteristics which makes it interesting from a sort of energy access point of view. So we have together by IFC and a local partner built a company in Myanmar, Yoma Micropower, which is getting scale and is primarily servicing telecom towers in the country, but also some villages, providing power to some villages, and we're also looking to expand to CNI activities there. So that's interesting business. We are looking also in other countries in Africa for similar setups, and we are looking at deals there now. So and we have done several other distributed energy investments as well. But still a fairly small sort of money. It's a sector in change, and it's interesting to be part of it and see how it evolves and try to get it to a sustainable sort of model, a commercial viable model. Thank you.
Thank you, Paul. Benoit, over to you. You're on mute.
Thank you, Ariana, and thank you for the presentation. Very interesting. So I'm Benoit Denis from the European Investment Bank. I'm a senior economist in charge of digital investments. So EIB is the Bank of the European Union. We are the largest IFI globally. We have about 400 billion in under management at the moment. About 14 of that being in the digital sector. In line with the European Commission priorities, both digital and climate action investments are top priority for us. So obviously, Tesco's match on 2 grounds here. We have been active in both sectors in developing markets for some time, and obviously we are also working on the Tesco. We have financed APT PowerTech as well, with 2 times 60 million, both in Lebanon and in Guinea. Really interesting deal in our view, and really looking forward to the discussion today. Thank you.
Thank you, Benoit. Henri?
Thanks, Ariana. Henry speaking here, so representing Green Giraffe. So I'm heading our South Africa office and covering more generally the Africa region. Green Giraffe, as a short introduction, so we are a renewable energy financial advisor, which means we we focus on raising capital, either in the form of debt or equity for renewable energy projects globally. So our main markets being Europe, Africa, North America, and Southeast Asia. So yeah, our core expertise in sector is to focus on usually on-grid utility scale projects. But that said, we also increasingly see initiatives, let's say, in the CNI off-grid space, and more specifically into the telecom sector. Indeed, the ESCO model is something that has come across our desk a few times. Still, from our perspective, coming from the large utility space, still seems like a nascent market, at least from an equity perspective. But nonetheless, very, I mean, with strong underlying economic rationale. And basically good prospects for growth, hence the attention on our side today on this panel.
Great. Thank you very much to all of you. As I said at the beginning, it's a really good lineup and a really good mix of investor types here, including advisors. So I'm looking forward to getting your views on this. Maybe we start off with kind of a general question, but how do you see the market today? I think Henry already mentioned that he sees it as a nascent space. Is that everyone's view, or do you think we've kind of moved now towards a more proven business model? Do you see this growing or not? Do you see this as a business more related to telecom or closer to the power aspect? And just the overall views on your market today. I think that would be interesting to hear. And we can go in any order. I don't know, Bertram, would you like to go first? You're on mute.
Yeah, pleasure. Thank you, Ariana. So no, I believe it's past the nascent stage. I would say it's a growing sector. It is a sector that, from my point of view, is gaining significance also because energy is turning to be one of the big issues for us, climate protection. So I think having the energy assets in the hands of companies who are really specialized and who know really how to run energy assets efficiently might be attractive for MNOs. The sale of the tower assets in the past has shown that MNOs, from my understanding, do not see this as a core business. So I believe it's really a business model that makes sense and that should have a good future.
Thank you. Anyone else would like to contribute views?
Yeah, I mean, just from our perspective, I quite agree with you, Bertram. I don't think it's nascent anymore. I think indeed that it's growing and that it's structuring itself. However, we still see a number of specificities. So we don't see a standardization of contracts, for example, or of business models. We've seen models where, you know, the revenue structure is a single fee, sometimes a multiple fee, sometimes a fixed, sometimes an indexed fee. We've seen the roles and responsibilities for the ESCOs on top of course, the energy being slightly different from one contract to the other, where you have the security, that's also the responsibility of ESCOs. Sometimes it's not included, and that very much depends on really a wide variety of reasons. So as long as, you know, this is now a proven business model, I do believe. MNOs have understood the benefits, and we're seeing actors like having identified that this is a key element of growth for them. But I still, however, think that it's still shaping itself and sort of getting more and more standardized and learning by doing and kind of a trial error, like very much for the PPA sector of utility scale that took certain number of years until becoming really plain vanilla investments for everybody.
Thank you, Rim. Paul, Benoit, anything from you to add to these points?
I can just concur that. I think one can argue if it's a nascent industry or not, but it's definitely not a mature industry and area. I mean, it's still making a way. What we experience in, to take an example from Myanmar, is the sort of a bit difficulty with having MNO at one side, a telecom at the other side, and ESCO at the third. So it's a triangular setup, and the contractual arrangement there are not necessarily always pushing for a sort of a greener planet, to put it that way. So the incentives are a bit sort of legacy for old contracts with the telcos, and we try to introduce new technology, and it's the pass-through of diesel for one, and so the incentives are not pulling always in the right direction for climate setup, to put it that way. But I think there are definitely forces and willingness to move that way, and I think we eventually we get there, and it's a matter of scale and investability and all of that. So still nascent, I would say, but getting there for sure.
Thank you. Bernard?
Well, I do agree.
I'm having some trouble hearing you. I hope it's not the same for everyone else. Hello? Was everyone else able to hear Bernard? I was having some issues. No? Okay. Would you be able to repeat that, Bernard, just in case other people had difficulties as well? Oh, okay. So maybe we come back to you on that, Benoit. I'm guessing it's a connectivity issue, since everyone else seems to hear me okay. So maybe let's move on to a very dear to our hearts topic here for all of us as investors in the space, both as equity investors and as lenders. What are the key investability criteria that you look for when you analyze an opportunity? And I think this is really the core of the issue. I think it will be extremely valuable for each of the ESCOs listening to understand, as financiers, what are those criteria that are very, very important for us as investors. Who would like to go first?
I can go first, but I think, maybe being an advisor, I'm not technically an investor or lender, so maybe I have to just start speaking on your behalf, or you guys around this panel, and then you'll see if you agree or not, maybe. So, I mean, looking at the underlying asset type, so the way I see it is we're talking about, powering a certain type of infrastructure, likely with renewables or hybrid mix of renewables and other technologies. This is inherently, very capital intensive. You pay for your capex upfront, you get it repaid over certain years. You only recover your equity investment over 10 years or more, depending on the underlying structure of your offtake contract, and then you actually make your IRR on the long term. So from let's say from the first criteria is first you need duration in your offtake contracts. You need to have a large portion of your revenues that's just classic stuff, largely contracted to allow to attract debt, and finally. I'd say one of the other key criteria is who's the off-taker, and what's the credit worthiness of that off-taker, and what is put behind from a contractual perspective in terms of potential guarantees and backing from that off-taker under your contract, just to be able to cater for certain scenarios as investor and as lender. So these would be the main ones that come to mind, and obviously as in any type of similar or even slightly different projects. I mean, there's loads of considerations around the underlying currency or around the underlying details under the contracting structure and all. But I'd say these first three are the ones that pop to mind first, basically.
Thank you, Henry.
Yeah, maybe I can go ahead. I mean, I think one of the challenges in when discussing bankability, and I'm now coming here from the debt side more, is that of course the whole structure, and I said that in the roundtable as well, the whole structure should be well equilibrated in terms of risk sharing, in terms of sharing of benefits. And by nature, this is a model where there is a very big and powerful MNO in many cases on the one side and a relatively small ESCO on the other side. At the same time, the asset that is going to be financed is the energy asset of the tower. And that is absolutely critical for the MNO. So if this is not run adequately, then the MNO will have to take it back immediately in order not to break the network. So what we have seen is, or what is our impression at least, is that this risk distribution and opportunity distribution is not well equilibrated. So what we are trying to have more closer look is, rather than project finance solutions, which would focus on one project, to have more a portfolio approach, that those risks are more diversified rather than in one inherent project. And I believe this would be one of the messages that I would convey. I think we have to see more opportunities in our markets. The MNOs should be a bit more courageous in putting portfolios on the market so that there are more portfolios available to be financed rather than individual small projects.
Excellent point, Bertrand.
Yeah, if I may chip in, for us, I mean, concur with everything that was said before in terms of importance. For us, it has been two key elements really. The first one is really, and I'm going to go back to the basic, which is really just operations and what this business is about. And from a lender perspective, for us, the strength of the ESCO is really key here. I agree with you, Bertram, that MNOs are powerful in this sort of equation, and them, as well as to a certain extent towercos, have been insisting and super ruthless when it comes to availability of power, because it's the key for them. So being able to back an ESCO that has a proven track record has been for us key. Would that be in the form of, an O&M for telecom, or someone coming, or more traditional EPC coming from the power side of things? But that is one of the things that we've been carefully looking at. The second point, to Henry's point, is really the bankability of the contractual structure, which when we started in 2017 was really, honestly, a wild guess. What was acceptable, what was okay, were those SLAs in line with what was doable, and so on. So as years passed by, we have started developing a bit of an internal expertise and have a bit invested with a law firm to build a risk matrix grid to understand what is okay and what is not. We're starting to have a little bit of clarity, but I still think that this might change and shift as also ESCOs gain more power.
Anything that we missed from anyone else?
I think you raised one other question, Ariana, that was on, is that a power project, or is it rather a telecom project? And there, I think the underlying risk is what is giving us the direction, and the underlying risk would be the success of the MNO, the success in the markets where the MNO is active, because it's the only off-taker in this whole structure. So I would rather see that as a telecom activity, because I think you need to understand the telecom sector, but there may be other views, I don't know.
No, fully agree. It's not like you can switch off takers in the meantime of your contract. So you have, I mean, you have to take a longer term view on that MNO and that of taker particularly. So yeah, fully concur with that.
I agree with that. But the telecom companies, they tend to stick around for a while, so that's a good thing. So, but you know, of course, it's a mix. I think one thing we see now in the different markets is the, you know, when you know, the ESCOs have been coming the last few years, but the tower companies has been there for a while, and the contracts are old. So you are sort of entering into a mixed thing, and you try to match, or the tower companies want to match the tenor of the contracts with the back-to-back with what they have with MNOs. So that sort of sets a lot of the financial ability criteria in the back-to-back contracts with MNOs. So I think there will be, you know, once you get into a setting where you enter into new contracts for new towers, etc., maybe there are, you know, will be able to stitch this a bit better together in a sensible way for more coherent financeability point of view.
I wanted to ask you, now that I have you, Paul, is a question. I think when we talked about investability criteria, we focused, and of course, on largely ESCOs that serve primarily telecom clients. But do you see, you know, specific risks related to ESCOs that also focus on CNI customers or other types of customers?
I think, you know, the good thing with the telecom contract is that you get a lot of footprints and a lot of sites up and running, and you can, you know, on a marginal basis expand these plans. You are there, you have people there, you have area there, and then if you have new customers in the area, you can serve them if it's sort of a viable proposal. But definitely, you know, it's different to serve, you know, one client under one contract for hundreds of towers versus, you know, being an end-to-end supplier to, you know, people in a village or SMEs, and it's a different credit risk. So it's a very sort of different business area. But the business you do, you know, putting out the PV panels or hybrid stations, or maintaining, operating them, that's similar. That's pretty much the same as you know, a tower. So there are similarities and differences. I think the good thing is you get footprints, and you can sort of expand your business when you feel you have you know, a proposal you're willing to back, basically. You think is a good idea. So I think the telecom tower contract is a good basis to go from if you have that ambition, for sure. But I think you know, we want them to make sense commercially, the contract with telecom towers on their own, and then the other activities are add-ons if you want to do them.
Right. So essentially what you're saying is that even for ESCOs that fall into that category of also being power producers and serving other customers than telecom, you still lead with the telecom contract and then build on top of that, right?
That's what we did with you guys in Myanmar, at least. I mean, of course, you know, if you do have other anchor investors or, you know, starting points which you believe in, you know, that could also be a starting point.
Right. So in my experience, I haven't seen a lot of this business model similar to the one you're describing and the one we funded in Africa yet. And I've been asking around trying to understand why that is. So I don't know if we have time for that discussion, but I would like to ask maybe a more basic question to the panelists here, which is, from your point of view as investors, and you've all by now done a number of deals, primarily in Africa, would you see it as a plus, as an advantage, or as a, you know, compounded risk effect if an ESCO came and said that in addition to their contract with the MNO, they would now like to serve nearby communities or other types of clients? Have you funded something like that before, and would you see it as a plus or as a risky proposition in Africa?
No, I believe as an add-on, we would love to see this, because we are a development bank, and whatever contributes to including the bottom of the pyramid people is very highly welcome. I must say, I do not know whether the bilateral relationship between the consumer of the energy in a village and the ESCO is sufficient here. I believe that if we included, or the MNOs would be interested in joining such a project, it would be more, it would make more sense, because in the end, the MNO has an interest that the handsets are charged with energy. So, and they have also the ability via mobile banking to invoice electricity. So if there could be created like a triangulum, yeah, that would be very beautiful, I believe.
But that is already there. I mean, the power is paid by mobile banking, and whether or not it's through a tower company or not, you know, they do charge their phones. So I think that dynamics is already there, and it's the interest of the MNOs that it actually works. So, you know, but I agree.
Yeah, just really quickly on this point, I just wanted to say that we've seen one that is currently trying to have this model. We've been also asking around why we don't see more of it. And the answer that we've been getting is that most of the time, those towers are not located in catchment areas of villages. They're generally on top of hills. I mean, notably for the rural and ultra rural sites. They're not necessarily at the heart of the village. So they're not necessarily in an economical close reach to a village. So that's why it hasn't been something that's widely developed. The one that we've been seeing is essentially peri-urban in an area which is more densely populated than what we see traditionally for towers.
Yeah, I would agree with what was just said. We also had a client looking at it, but not only there is a site, but also, you know, are you willing to have someone getting close to your equipment? I think people, you know, operators tend to ring fence a bit in the installation, making sure there is no disturbances. I think it's probably much more impactful to have a solar home system on the site that could be used as a community system to charge phones, and leave the tower on itself running properly, making sure that there is no interference here. So, I mean, technology-wise and management-wise, I would be a bit cautious with this.
Right. The other debate that I see, and this is a business model that I've seen in India, is ESCOs, because of wanting to serve other companies, not just telecom companies. They basically locate their panels and their mini solar farm outside of the tower ring fence, right? So then they try to situate themselves somewhere in the middle, in between that community and the MNO site. But again, I think maybe population distribution in Africa and other factors contribute to the slowness, so to speak, of adoption of this model. But I think, to me, the India market is fascinating because they have so many years of operating under this model, and they've tried so many things, and many people have failed. So there are a lot of things to be learned. So I think one of the benefits of my role, for example, being in a global institution, is that I constantly draw comparisons and try to bring whatever was tried or learned in another region to the other one. So I really look forward to seeing more of these in Africa. Okay, we are about 12 minutes. We have about 12 minutes left. So let me just pose one final question to all of you, and then we'll pass over to Matt for a round of Q&A. There may have been questions that came in from participants. I want to make sure we have some time for that. But also an important point to discuss here is the forward-looking view. So you saw in my presentation, we tried, or from the IFC side, to provide a little bit of look into the future of where we see the market growing, in which regions, which clients, who will be driving the demand, that sort of thing. So I wanted to ask you, what are the key opportunities that you see and where? Are there specific regions or countries? Also, what in your view are the key inhibitors for growth, and how are your respective organizations prepared to contribute towards removing or addressing those? That many volunteers?
Okay, I can start.
Thank you. Thank you.
Sure. I mean, in terms of forward-looking perspective, as you said, Ariana, in your presentation, the cake's here and the cake is growing. So we are here and growing with it, hopefully. So definitely very positive and very active in the space. To a certain extent, because we're don't have access to the billions of dollars that some of you guys have access to. We've also tried to position ourselves, because we've been one of the early financiers to the space, as kind of a pioneer and bring people together in syndications or just even introductions when we cannot do it because of whatever reasons. So that has been something that we've been actively doing for the past, I'd say, 2 years. The second point, when it comes to your questions on hurdles, I definitely think that some of the ESCOs that we've been discussing with have asked us for a lot of flexibility for in terms of the structure of financing itself. So longer grace periods, longer tenors, security packages that are a little bit lighter, and so on. And that's something that we've been able to provide. For example, not insisting on asset security, focusing on the contractual value, etc. In terms of, focused on countries also, I mean, we are definitely an Africa house, so we're going to keep being active in the continent primarily. We're totally agnostic in terms of countries. We've been investing in really frontier markets such as Central African Republic this year. And how have we been able to get comfortable with security risk, overall weakness of regulatory framework, and so on? Well, widely thanks to structuring, but also to political risk instruments that we've been able to put at work, thanks to some of our investors. And lastly, maybe just in terms of, you also asked us, Ariana, to think about what call for MNOs and towercos we wanted to bring. Well, from our side, it's to MNOs to bring financiers and investors earlier on in conversations. We had certain instances where in the contracts there were clauses that were really not doable for us, and it was very hard at that stage in the process to sort of revisit the contract. So we hope that they can see investors and lenders as partners, and we can build this together.
Thank you, Rin.
That was a very good summary, I would say. I would underwrite all this, what you said, especially on the contracts as well. In the end, in many cases, the final product reaches us, and then it does not work, and that is not good. Maybe on the opportunities, what we see is that there are more individual opportunities. There is one country coming up, then another country is on the market. I personally do not see really a system there, and that is the reason also why we currently act very opportunistic and look what is happening. But we haven't seen yet this big step forward, the big move forward. It's all well, here and there and here and there. So I'm responsible globally. I think the most dynamic market is, Ariana, as you said, and will be Sub-Saharan Africa. I would share this view. And coming back to the contract question, I was very pleased to see that this is one of the items in your report as well. I assume that this would also lead to a more standardization, what is really needed in an ESCO contract in order to get this bankable and to set some standards. Yeah. Yeah.
Thank you, Bertrand. Benoit, Paul?
Yeah, no, I concur with that. I think one thing we have been looking at when we, early days of the Yoma project in Myanmar was, the flexibility of your equipment, which is it's movable for certain sites, etc. If there are, when grids arrive, things like that. In a portfolio view, you can take some of that risk for sure, and in particular if you get the larger deals, maybe that risk is downplayed a bit. But I think we will still live with the legacy of the contracts between the existing partners for some time, for the large number of sites. But when they run out and one entering into new, the escrows hopefully are there and will be able to, make a package, an offering which also suits the finance side of things better and in a more coherent way. So that is maybe good and will create some momentum as well. So we'll see.
Right. Thank you. Benoit, Henry, any views from you on the forward-looking side and your organizational role in this?
I think we have on my side, I have a very biased view in the sense that the lenders and the investors we usually interact with are above a certain scale, and inherently ESCO projects are a myriad of small scale assets ultimately. So I'd say in the to start attracting, on the equity side, the institutional type investor, if I can say, or the lower cost of capital type of investors, and on the debt side also maybe to potentially deviate a bit from only relying on the big multilaterals and DFIs. I mean, at some point we'll also need maybe a bit of scale in the sector, and in terms of the procurements that the MNOs are sometimes running, to also consider not just doing some small test sites here and there to just prove the concept, but also jumping straight to having a minimum amount of scale. I'd say would be is one of the trigger. Then in terms of countries, as you said, there's I don't have a very clear view on which are the most active markets, to be quite honest. It's more, I'd say it's same as for CNI, same as for even potentially large utility scale on-grid. It's really on a case-by-case basis and on a country-per-country basis. Sometimes one region is going to become active because there's a real will to push forward in a certain direction, and it's going to go quiet for a few years. So it's really a bit opportunistic, I'd say, on that front.
Okay, well, I see we have 2 minutes left. I want to give a chance to Matt to raise any burning questions. And I think if there's many of them and we don't have time, I'll be happy to engage offline with people. But Matt, over to
yes,
you.
I think you're going to need to engage offline. There's quite a few people here, people from American Tower, Pan African Tower, and other organizations who are looking to get in contact with you and chat a bit more about the IFC. So I'd recommend those people to contact you directly on the platform. There was a question here that we might be able to cover is what tools are used to measure the yield effectiveness of the investments. Are those operating KPIs combined with sustainable development goals? How do you assess it overall as a success or not?
So I think you have here four, actually pretty much everybody. If I look around the table, everybody has objectives that are both financial in nature. All of us have to make a return on the money, not because we take on bonuses, but because we have the mission of reinvesting every cent of it back into other projects. So first, the projects have to be commercially viable. And second, all of us here have goals around the development and sustainable growth of the country, region, and also renewable energy targets. So I would say, if you'll allow me to speak on behalf of everybody, that it's a mix of these two. I don't think, now speaking for IFC, I don't think we would be able to approve a deal if we have only one of these elements, and we always need the two of them combined.
Okay, thank you very much for that answer. I think we're going to need to take some of these conversations onto the platform. But yeah, thank you very much for everyone for your contributions. And hopefully this is the first of many sessions we do around these topics. So thank you very much.
Thank you very much, everybody.
Thank you.
Thank you.
Thank you.
Bye.
Bye-bye.